Joining us for the hour, our guest host, Senator John Barrasso. On one hand, Senator, I can see how people that want to pass this would say there's not much difference between the two, and that it's going to be reconcilable and it's going to get done. I see that because the overarching themes are still in both plans. But there's some things that are worth talking about here, and that one is Kevin Brady over the weekend saying that he guaranteed that getting rid of SALT, of the state and local taxes, will not be in the bill, that there will be some deductions left. When that's a key part of the Senate plan to pay for it, is that those deductions go. What's the, and also, it's going to be a long question, but there's been talk that the president favors one plan or the other. And I think it was that he favors the Senate plan, right? So which way is this going to play out here?
Well, number one, thanks so much for having me.
You're welcome.
We have a great opportunity here, a once-in-a-generation opportunity to fix a very broken
you're going
tax
back to
system.
the talking points again.
I'm going to get right to the bottom line is that we are close enough together on the issues, the House and the Senate. My issue is just how close we are on the things to really change this worst tax system in the world to the best tax system.
Will they be deductible after this or not? Because that's, you got problems with some guys in the House.
I'd like to get rid of all of it. I saw you had the mayor of New York City on the other day. I don't see any reason that people all across the country ought to be subsidizing folks who want to live in high tax areas, that just encourages additional taxation at that local level. I want to get rid of all of it. More important than that, I want to get tax reform and tax relief for the American people.
Will they lose your vote if it goes to committee and it comes out that the House gets its way and that some of those state and local deductions remain because that's what they need to get their members on board for it? Will you still vote for it?
I'm continuing to work to yes. We have a group of us committed to getting this done. I think it's just about every Republican senator and House member. It's that critical. Look, we've been living under the last 8 years, this misguided obsession with redistribution of income. This is about economic growth for the country. We cannot allow small things to get in the way of this opportunity, 30 years to make America the best place to invest instead of one of the worst based on the tax system. We agree, both sides of the aisle, both houses of Congress, lower the corporate tax rate to 20%, have to do that. That is going to generate additional investment and additional opportunities, and then make, you saw the front page of the Wall Street Journal, fairer, simpler, straightforward tax system for all Americans so people can keep more of the money that they earn.
Someone earlier was, and it would be a nightmare for the GOP, but talking about some of the similarities to when, you remember, Brown got in as a senator and suddenly the Democrats didn't have the votes that they thought they had in the Senate for health care. And now you got this Roy Moore situation here. Is there some? Is this going to be an issue? Is he going? Do you support him? Is he going to win the election, even despite all the stuff that we're hearing about? Is there any way to get some other Republican elected in what was a safe seat?
Well, these charges seem very credible. They're very disturbing. If they're true, he should move aside.
Could Luther Strange get in with a write-in, you think?
There's a month between now and the election. Ultimately, the people of Alabama are going to have to make that decision. I'm committed to get tax reform done now.
You need that
I want
vote?
to get that done before. You can get into the issues of when one senator leaves and another senator comes in. We need 50 votes and the vice president to break a tie.
Right.
I want to get every Republican senator to support this. I think we're there. We're continuing to work to get to that, to work out the details. We have to pass something in the Senate, pass something in the House, get a conference committee. The president wants it on his desk by Christmas. I want it on his desk and signed by Christmas as well.
There are questions about this. Some people have called this just a tax cut, not tax reform. But if you look through, even the Joint Committee on Taxation says that under the Senate bill, over 20% of those who earn between $200,000 and $500,000 will see a tax increase in the year 2019.
Well, in the Joint Committee on Taxation, the big winners are middle-income Americans, people that are working hard every day, getting to keep more of their hard-earned money. That's my focus. That's what I hear about. That's what I hear about in Wyoming.
$200,000 it goes a lot further in Wyoming than it does in New York or New Jersey or in California or in Connecticut. Those are people who are middle income. When you look at $200,000, what do you say to that?
The great majority of Americans are going to have more in their pockets, more take-home pay. The economy is going to be more robust. I believe wages will go up. There are going to be lots of opportunities. This is the right thing to do. It's been 30 years in the making. It's really about economic growth. the territorial tax, bringing back money that's overseas, discouraging the jobs. You can go item by item by item. I think all of these things are the things that are going to boost the economy. We're at 1.8% economic growth over the last number of years. That cannot be the new normal. We need to get to 3% economic growth. I believe this does this. Even if we just raise it by 0.4%, that brings an additional $1 trillion of revenue and stimulates the economy.
A lot for the SALT stuff. I mean, you're allowed to keep, you're not getting rid of the estate tax. You're just doubling the exemption. You're keeping the mortgage, that's a sacred cow. People go crazy if you do anything to that. You're keeping that at $1 million, but you're getting it all from the state and local taxes. If Brady is guaranteeing that he's not going to let that happen, then you're talking back about estate taxes maybe, or you're talking, I don't know where you pay, I don't know how you move things around to get it under 1.5 trillion.
Because ultimately you're going to need votes from both the House and the Senate, and from congressmen who represent people.
You had Andrew on the pass-through. He likes the Senate plan. He gave him a much higher grade on
pass-through at 30%. It makes more sense.
Yeah, I mean, he didn't give me a thumbs up. Yeah. You were damn close though, weren't you?
There are elements that are. Look, I give him a lot of credit. There's a lot of credit going.
I got de Blasio. I still can't get him. But I actually got de Blasio.
But I do think there are still elements of it that, look, we're still dealing with a $1.5 trillion deficit. That's what we have.
I know.
We have to figure out.
It's early in the process. The markup starts today in the Senate.
That's been anchored somehow as a number to beat, which is actually.
Oh, I know. We certainly don't want to add to that $10 trillion that we got over the last 8 years. God, we don't want to add another 1.5 for growth.
Given how great I'm told the president thinks our current economy is, it's not clear to me.
Think how much better it could be. Think how much better it could be.
A lot better. We got to get the corporate rates down. Let people decide what they want to save and spend and invest.
The senator is going to be our guest host for the rest of the hour. We'll talk more about it. Also, when we come back, more on the big news of the morning. GE cutting its dividend in half. We'll hear from an analyst in just a bit. And later, Uber and SoftBank reaching a deal and possibly paving the way for an IPO. Squawk Box will be right back. Good morning, everybody. Welcome back to Squawk Box here on CNBC. We are live from the NASDAQ market site in Times Square. Among the stories that are front and center this morning, 2 well-known toy makers may be joining forces. The Wall Street Journal reports that toy maker Hasbro has made a bid for rival Mattel. No details of the bid have emerged, but Mattel currently has a market cap of just over $5 billion, and you can see the stock reacting to that. Mattel shares up by just over 21%. That's a gain of $3.18 to $17.80. Wall Street bonuses may rise as much as 10% this year. That's according to a report by compensation firm Johnson Associates. That would be the best jump for bonuses since the year 2013. And Thor Ragnarok topped the weekend box office, taking in $56.6 million in North American ticket sales. That figure comes in the movie's second weekend of the release and topped the combined total of 2 debut movies, Daddy's Home 2 and Murder on the Orient Express.
Okay, time to talk markets. Joining us right now to break it down for us is Michael Gapin. He's the chief U.S. economist at Barclays. Also, Greg Fisher is here, chief investment officer at Gerstein and Fisher. Good morning to both of you.
Good morning.
You look at the markets, they're marginally down. We're going to have retail numbers this week. Where are we? What do you do? And you have taxes, by the way, the sort of elephant in the room.
Right. I mean, the tax story is obviously the interesting one with a lot of moving parts. For me, just the big data point this week will be the CPI release to see whether we're getting any momentum at all on inflation. That'll tell you a lot about not whether we get a hike in December, but whether they continue into March. I think there's a very good case that they hike in December, but go on pause to see where these underlying trend in inflation is.
How much do you care if he's successful?
I care if we're all successful together, right? But I think picking up on this theme about, what do you do, thinking about the next couple of months, the theme that we consistently see is just the fact that investors are completely underweight, at least U.S. investors, foreign markets. And there's so much chatter right now about what's going on here. But as we approach the end of the year, I think it's a good time for investors to think about increasing their exposure to the foreign markets, possibly think about the tax changes and how they'll impact their U.S. holdings, and possibly think about some smart things to do from a tax point of view. We're talking a lot about taxes at the national level, but we want to think about them individually.
But just on the tax piece, what's baked into? What do you think is truly baked into the cake? I mean, what do you think the markets truly believe is going to happen? or not?
I think on average, markets do a pretty good job pricing these things. I think investors typically don't have good information about what to do regarding their portfolios and tax changes. I've done a lot of research on this over the years, and the reality is that if you were to make decisions about what to do with your portfolio based on your prediction of tax changes, I think you're probably going to have a hard time with that. So my best guess is the markets are pricing in most of what's going to happen at this point.
Is that true?
I think we would say there's still some room to run on that, at least on the equity side, given a corporate tax rate down to 20%. I'm not sure markets had fully priced in. We'll see if that sticks, if some of the exemptions come out.
In 2018 or 17, or what are you expecting?
We think there's probably another 6 to 7%.
He says it's happening before Christmas, so.
Yeah, so that would be a lot earlier than I think markets expect. So I think that there's probably another 6 to 7% from potential earnings upside.
And if it doesn't happen, our Treasury Secretary says that we would have a real. I mean, I don't know if that's sort of a threat, if you will. He says the markets are going to not tank, but that they would come off in a material way. Do you believe that too?
We're committed to getting this done. We want to get the corporate rates to 20%, bring back money from overseas. We need to do this, and we need to do it certainly, clearly early enough that the impacts are there in the economy for next year, because that's something clearly anybody that's running for re-election is focused on, is that the economy has to be moving ahead. Economic growth, a 3% model we're aiming for.
I think this was written about earlier, but how many companies are actually paying less than 20% effectively? Like, what impact will that actually make to their financials? Is it really as big of an impact as we're all thinking it will be?
In terms of bringing businesses back, in terms of having people make additional investments, in terms of how we're going to be, even dealing with expenses in the health, in the model of corporate expensing and taking that early deduction. I think those are all things that I think are going to help right away.
You, which is, and this is the other side of the aisle. Elizabeth Warren and Al Franken put out a video of themselves. I don't know if you guys saw this over the weekend, talking about what the tax plan would do. Obviously, they have very different views of what you think it would do, and they literally start reading press releases and earnings reports and earnings calls from CEOs over the past year who've been asked what they're going to do if the corporate tax goes down. And most of them talk about dividends, they talk about buybacks, they talk about all sorts of things like that. Virtually none of them, of course, in this instance, talk about wage gains, talk about more employment, or any of it. What do you think of that?
The American people know what they think about it is we need tax relief and tax reductions. And, Al Franken and Elizabeth Warren, they can say what they want. I mean, this is kind of the chicken little sky is falling. If we do this, things will get worse. That's their model. But I think they had those press releases written. The Democrats have, certainly Chuck Schumer has, before they even saw what we were putting out, before we released the bills. So, this was all fiction, and the Washington Post gives them 4 Pinocchios for their comments about who is helping, who it's not helping. We're going to get this done. It's important for our country, and it's important for families.
Let me ask both of you as investors and market watchers and economists, do you think that if this plan goes into effect, that it will actually create tremendous wage growth and employment?
No, I don't. I think the economy is in pretty good shape as it is right now and doing pretty well on the employment front. I don't think the tax package would hurt. I just don't think it helps as much as its proponents would.
But could those horrible things like dividend increases and buybacks, could those come to pass where people that own stocks, pension plans and workers that have investments and the dividend goes up? I mean, how do we stop that?
No, but I mean, to direct it.
Sarcasm is dripping.
What can we do? What if these companies start doing much better? I mean, what if their profits grow? What if they actually get higher profits from this? What are you going to do about that? We got to somehow.
You're not going to do anything about that. But if the point is to direct it to new investment and new hiring, then putting it into dividends and buybacks is a second best outcome.
Short of wage price controls, that's the way things work. You hope that companies compete better globally, that they are able to spend more money that they would have spent on taxes, investing in plant and equipment, and compete better, sell more stuff, bring in more people. Maybe the workforce gets a little tighter.
Right. And that's a marginal improvement.
That's the way you're hoping it works. And if some of it's buybacks and dividends, when you bring $3 trillion back, so be it. There's a lot of working class people that have 401ks and that would benefit from.
Absolutely. Well, look, anything we can do to encourage innovation and growth. I don't think, any society's ever solved their problems by cutting costs and increasing taxes. I think in the long run, we've got to do whatever we can do to bring money back here. That's a good idea. And to increase innovation, especially for small businesses. But as far as dividends, I was looking at this too as it relates to taxes. Dividends, yes, they're taxed at preferential rates, but if they were to increase for some reason, I think the average American's giving up, 25, 30% in taxes on dividends. So I don't know that we necessarily think of that as a good thing from an investment point of view if dividend rates go up and it just takes it away from something else.
Okay, gentlemen, thank you. Great conversation. Appreciate it.
Thank you.
Coming up when we return, we mentioned it earlier, Uber could be one step closer to an IPO. The company finally reaching a deal to sell a significant stake to SoftBank. We have more on this story straight ahead. As we head to a break, take a look at U.S. equity futures at this hour. Dow looks like it'll open off. It's now off close to 75 points. NASDAQ off about 19 points. S&P 500 off about 7.5 points. Squawk returns in a minute.
Welcome back to Squawk Box. Our guest host this morning is Senator John Barrasso. And Senator, you've just come back from your district or from your state,
yes,
where you've been talking to people across the state of Wyoming. What did you hear from them in terms of what they want when it comes to this tax bill?
Well, they want tax relief and tax reduction for them personally. They want a simpler tax system, something that they can do more quickly and not spend a lot of money on lawyers or accountants trying to figure out. And that's what we do. When you increase this, the deduction to $24,000 for a family, the standard deduction, that allows many more people to not have to go through the whole concept of filling out a lengthy tax return. They want to keep more of their own money to make decisions. They are also delighted at home with President Trump's decisions, with the regulations that he's gotten rid of so many that make it easier for jobs in Wyoming to allow to use the energy resources that we have, the oil, the gas, the uranium for nuclear power, all of those issues. The coal certainly is a big part of that. The jobs are coming back, so people are pretty happy and upbeat and optimistic as a result of the new administration.
There are a lot of people who will get a tax cut as a result of this, but there are some who will get tax increases. Not all of them are in the upper income brackets. Some of them are in the middle income brackets. Here's someone who just said, I'm in the increase bracket. This is someone who tweeted to me. I don't mind paying a bit more, but not when people in higher brackets get a cut. And that brings us back to this thing that I've been harping on again and again, which is carried interest. How come in both the House and the Senate bill, carried interest stands? Do you think carried interest is income or not?
Well, to me, it's a huge loophole that needs to be closed. I think the House takes it down to 3 years. But look, this, to me, looks like earned income as opposed to a long-term capital gain. So at the minimum, this is a loophole that's going to be significantly closed.
How come? Well, it's not in the Senate version. It's not in the House version. It's 3 years. It's not talking about changing it. They're still going to be paying 23.8% on income that you see as income and that I see as income, instead of the top bracket of 39.6% that people who earn on a W-2 will be charged. So every senator, every congressman that we've talked to about this says they don't like it. How come it exists in both these bills? What happened? Was it lobbying efforts from people who make a lot of money and who, by the way, doubled their donations?
The Senate markup starts today. We had a full conference meeting about this. This specific discussion was held on Thursday of all the senators, and they said, look, we're going to have this debate and discussion in the Senate. Part of the markup, realizing it's a loophole, needs to be tightened significantly, and it's a $20 billion issue that you could use.
So you could use that funds for something else?
Absolutely.
So your standpoint on it is you're going to fight for that to be closed?
I'm going to fight to close that loophole, yes.
That's good news. What else do you think needs to happen in order to get the bill passed? How quickly do you expect to have this passed?
Well, I agree with the editorial in the Wall Street Journal this morning. I think it's important that we eliminate the individual mandate on the health care law. I mean, this is supposed to be just taxes, not health care, but it brings over $300 billion, over the 10-year window to the table that you can use to lower the rates and make permanent the territorial tax system and make permanent the 20% corporate rate. So it's very critical to use it that way. Plus, it's the right thing to do. When you look at the fact that over a third of the people that paid this horrendous penalty, the tax, as you will, for not having Obamacare, those are people that earn less than $25,000.
When we come back, I want to ask you about, the Senate versus the House plan, this fourth bracket. That, raising rates on Reagan, you cut rates across the board. Suddenly we're back to, well, we got to pay for this, we got to do this here. So you almost sound like the last administration, these people can pay a little more, they can afford to pay a little more, and that's not the way. If you're looking for redistribution, fine. If that's your goal. But if it's growth is what your goal is, you don't do it that way.
My goal is growth, economic growth for the country.
We'll talk about that.
We will talk to the senator about that when we come back. We'll also talk about GE's move to slash its dividend. That news out this morning. GE is going to be slashing its dividend in half. We'll talk more about that. Check out the futures under additional pressure. Dow futures now down by 70 points. By the way, as we head to a break, here's a European look at the markets right now at this hour. Down across the board, with France being the biggest decliner. The CAC is down by 0.9%.
Welcome back to Squawk Box. Our guest host this morning, Senator John Barrasso. That will be tempting, Senator, and that is, if you don't get your way with the state and local taxes, and Brady says there is going to be some deductions left, you're going to have to look somewhere else. And these guys have already said they might go to actually raise taxes above 39 or whatever it is. There was a fourth bracket potentially or something.
The House had a bubble bracket.
Will
and the
that
Senate
come back?
Does not. We're going to pass something in the Senate. That, to me, is my focus right now as chairman.
Well, you don't know
of
what the
policy.
final bill looks like.
The markup starts today. It's going to be carried live.
And then what happens when you get together with your buddies across the aisle?
Yeah.
I mean, across in the House, not across the aisle.
Big picture, we're going to lower corporate rates to 20%. We're going to have a territorial tax system, so money comes back from overseas. We're going to give people across the board tax reduction and tax relief, and we're going to simplify the system. Then we're going to have to get into the nuances of this.
So how do you think? I'm sorry. How do you think 2018 is shaping up? Given the Democrats think that, the Virginia, Terry McAuliffe is supposed to be our next president now because of what happened in 2020, because of what happened in Virginia. I mean, was it that significant? And if you do pass this, will it save some seats, do you think, or is it already looking bad in 2018?
Well, as they say, it's the economy, stupid. We need to get the economy continuing to grow, and the economy is doing well now.
Right.
We've had 2 quarters of over 3%, but what we've had from the previous administration was 1.8%.
That's not translating into people's attitude about President Trump, though, at this point.
2 million new jobs since Election Day a year ago. And in Wyoming this weekend, people, some folks said, well, just what about Inauguration Day? Doesn't matter. On election night, there was a new sense of confidence and optimism and positiveness. It was coming, and the money started to flow. People started to be much more optimistic about things.
Thanks for being here today, for
having
all
me.
your time. We appreciate it.
Thanks, Andrew. Great to see you.